Well, hi everyone, Christine McCoy with the Real McCoy Group of Coldwell Banker, and I am here with Adam Praden, one of our very favorite lenders in the area. He's with Guaranteed Rate Affinity, and we are just going to sit here today and talk about the market. You'll see that we have notes in front of us this time, and that is mostly to keep me on track. I'm not sure, Adam, do you go off track?
Quite a bit, but this should be fun.
Yeah, so the spring market for us has been really interesting. I'm sure you're seeing it on your side. Interest rates have been up. Prices are starting to decline a little bit because the interest rates are going up. So we have a lot of really cool opportunities for buyers. Sellers have to be a little patient. So what are you seeing on the loan side in terms of financing, appraisals? What are you seeing?
Well, yeah, it's a mixed bag, to be honest with you. On the financing side, actually, a lot of the guidelines have lightened up a little bit, so which is pretty nice in my world. We have a little more flexibility. Appraisals are, they're taking the normal amount of time that we have before. It's not quite back to pandemic and the frenzy going on there where everything was taking considerably longer. We're back to...
We were waiting on everybody. We were waiting on home inspectors. We were waiting on appraisals.
Everything
was delayed.
Yeah, and now we're back to like normal process of 3 to 4 weeks for settlements. We usually can get them done pretty quickly.
Yeah, this interesting market, and I talk to my agents a lot about this, but there's buyers and sellers in every market. You just have to know which market is for you, really. So right now, buyers are finding some really nice opportunities, although they're trying to take a little bit too much advantage of it right now. So we're actually getting some offers that aren't going through. But the appraisals seem to be keeping up. Like when the market declines a little bit, like our pricing is declining, appraisals are fine because you have the older data. But when we saw in the pandemic was appraisals were trying to keep up because the prices were rising so fast.
Yeah, they couldn't keep up with the market and they were lower than what, that home was going for. But then now that new home sets the market for those appraisals.
Right.
So it was, a little strategic on when you're going to order your appraisals and when things are closing and things like that. But, but now I think we've fit a little more of a normalcy in some respects with that. We leveled out a little bit.
Absolutely. And what we have found on the selling side is we have to be really realistic about our pricing. During the pandemic, like we keep talking about, you could just overprice, and you could leapfrog your neighbors. And now you really have to be strategic, really look at those market values and make sure that you're okay selling at that price and know that oftentimes you're getting 2 to 3% below asking price when you come to a final conclusion when you're negotiating a deal. And some sellers don't have to sell, so this may not be the right market. Some sellers do have to sell, so then we just have to price really strategically.
Yeah, and the same thing like on the buyer side, we're starting to see them come in, like I said, trying to negotiate more, come in a little lower prices, things like that, because they might not have the flexibility they had during the pandemic when people could work remotely and they were thinking that I'm going to have way more time to spend down here at the beach or whatever it may be. Now their life has come back to a little bit more of a normalcy type of thing.
Right.
So it seems like they're doing that with their offers as well.
Yeah, and we're finding actually too, settlement assistance is going through again. We're getting some more settlement assistance for our buyers, which is great. And things like that. People are taking home sale contingencies again, as long as they're under contract. So it's really provided a lot of flexibility for buyers and sellers. Like I said, just have to be open-minded. Now that does not discount the fact that we still have multiple contracts happening, especially in some of the lower price ranges where we don't have as much inventory. And of course, waterfront here. You go luxury and you often have multiple contracts for the right property, but it's certainly not the norm.
No. Like I said, if you have the right house and the neighborhood everybody wants to live in, it seems like it's going to get a lot of attention, but not everywhere. So it just kind of depends on the situation of the home and where it's located.
So Adam, we sell a lot of different homes here on the coast. So we handle the coast of Delaware, the coast of Maryland, and we handle everything from condos to retirement homes to vacation homes to single families out in the farms, like farmland. So talk to us a little bit about like some of the loan types that people can take advantage of in this area that may not just be the standard conventional.
Yeah, Christine. I mean, there are loans for everybody and for every different type of situation, every different type of property. We're sitting out here on Coastal Highway. We're looking at condos over here. Condo financing is a little bit different than...
Can be a little challenging.
Yes. Yeah. And it's a little bit different than if you were just buying a single family home somewhere else. So, we have financing for that depending on the situation of the condo and what your intentions are, right? If you're going to use it as a second home for yourself or possibly for some rental income. We have some DSCR loans, which are designed to help investors obtain financing. So those are great.
And those are based like on rental income, correct?
Yeah. So it's actually a great type of loan. And at the end of the day, you're taking what the rental income is of that property is on a monthly basis. Will it cover the expenses for the mortgage, the insurance, taxes, and the condo fees?
Right.
And as long as the rental income is covering what your expenses are, that's what we use as your income in a sense.
Right.
So we can avoid tax returns, we can avoid your pay stubs, all those types of things.
You just have to have enough rental money, which can be challenging. I mean, here near the beach, you can get condo fees can be pretty high.
Yes. So, a lot of that's going to be based on those condo fees and your down payment. And at the end of the day, it's just trying to get those things to work.
Like managing these different types of loans, I mean, one of the things that we always preach, not just because you're one of our favorite lenders. I mean, you are the favorite lender,
Thanks.
but
Appreciate it.
but one of the things we always preach to our clients, especially if you're doing some of these condos, for example, that you need to know somebody, that you have to use a lender that is in this market. And we've proven it over and over again. Condo situations, you have to have reserve studies. You've got to make sure that you are approved, that lender can approve that condo association. And local lenders often have those condos already approved because they do lending here all the time. If you have a lender in Nebraska, they've probably never seen some of our Ocean City condos, so they'd have to go through the full approval process, and that can take some time.
It does. It does take some time, and that's why you need a loan officer that's, roll their sleeves up and get into it. At this point, it's not just it's a nice looking building and we're good to go. There's going to be condo questionnaires. They're going to ask tons of questions. Based on those answers, there's more questions that you got to go into it. There's insurance policies that the building has to have. And it's just trying to navigate through those things. And as a client, you don't have to navigate through those things, but you have to know those things are going on and that they're a good thing. At the end of the day, you're buying into something that you want to know that the building has the right amount of reserves, the budget's there, they have proper insurance, that there isn't a ton of delinquencies, let's say, in the building. I mean, you're buying into a community at that point. And we're doing it on our end because we're protecting the loan, but ultimately it's protecting
you as well.
As a client.
Absolutely. So then other types of non-conventional loans, you do some jumbo is a conventional, right?
Well,
or is it non?
It's going to be a non-conventional, non-conforming loan. So we do jumbos. I mean, we can go up as high as somebody wants to go, 4 million, 6 million, whatever it may be. Most loans don't fall into that area just because there's only so many homes that value that, But
we have a small luxury market here.
but to have somebody buying, a home for, 1.5 million and putting down, 20% and still borrowing, well over $1 million, that's a jumbo loan.
And they keep raising those requirements. To get to a jumbo loan, the number is somewhere in the 800s.
Yeah, $800 and $30,000 or so.
I just put Adam on the spot.
Thanks. So and
$832,647. Somewhere in the 800s.
Yeah, it's in there. And not every loan's going to fall there, right? 'Cause depending on the purchase price, how much someone's putting down. But we have those, and they're very common. And believe it or not, there's times where we use that same jumbo investor to do a property that might only be $600,000 because they might have some other rules or less rules where we can use, like possibly if somebody's self-employed, maybe use a bank statement for them instead of using their tax returns because they have creative accounting and things like that. Or those DSCR loans we were talking about as well. Those fall into those type of loans too.
And sometimes some things to be aware of, like some people will come in and they want to buy a second home. They're like, I only want to put 5% down. Well, that doesn't always happen. Sometimes the loan requires more down just based on the loan type, correct?
Exactly. So like your second homes and investment properties, typically they're going to want more money down. And we can navigate through those. I mean, there's times where we could do it as low as like 10% down. We have talks with clients. Maybe they don't have as much liquid, but maybe they could borrow from their 401k to come up with the extra money. Always trying to find something or a way to go for them, to give them direction to get their home.
We're finding a lot more people, even in the luxury market, are using loans. We were talking about this earlier because they're making enough money in the stock market or wherever that even with 6.5% or 7% interest rate, they are able to make more money and borrow a little bit for less money. So it actually makes sense for them not to pull their cash out. So we're doing a lot more loans like that. So the moral of the story here is talk to lenders and understand what the programs are for the type of property you're looking for. Understand what your cash requirements are going to be. We can go into closing costs in Delaware, which are high. Maryland is not nearly as high because our transfer tax in Delaware is 4%,
Yep.
2% to each side, which is one of the highest. It is the highest in the nation, I
I
believe.
believe so.
So there's a lot of considerations that you really need to have a talk with your agent about. You have to talk to your lender about and really understand how you're going to finance the property.
Yep.
Of course, you can always pay cash. We never mind cash. Well, he does.
I do.
Don't ever pay cash. Only
Always
use Adam.
finance. But yeah, so, and then even with that, there's, people might have their money, but not everybody's going to have it necessarily in a brokerage account. It might be in a
Right.
401k, or it might be there, and there's going to be, fees that go along with that, and, taxes that they're going to get hit with.
Yeah.
So a lot of that, plus, I'm sure you noticed this, we have a lot of people that are, maybe they're not quite retired, but they're getting close to it.
Right.
Or maybe maybe the spouse is retired, or, those type of things, and they're
Right.
buying their eventual forever home, but it's not their permanent home right now. It's a vacation home, but
Right.
they're going to
They're gonna be
transition.
eventually here.
Yeah,
Yeah.
and, I think we see a lot of that here from people moving, from
Absolutely.
Pennsylvania or New York or New Jersey, gravitating towards
Yeah.
their beach home.
Well, and I think one of the things that I talk to my clients a lot about, people that are doing that are kind of in transition, and maybe they can afford 2 mortgages, but maybe they're going to be transitioning. We talk about the recast option,
Yep.
which is a fantastic option. Do you want to explain kind of what the recast option is?
Yeah, it's great. We use it a lot or take advantage of it a lot. And the idea of a recast is, let's say, you're going to sell your house in 6 months, but you're not ready, and you don't want to have to sell and buy the same day.
Be
and
homeless
have-
for a day.
yeah, and deal with packing your house and the
Right.
movers and all the stress that goes along with it. So some of these folks who are financially stable enough and can do
Right.
this, we'll do a loan where they say, hey, it's $600,000, put down as low as 5%, so they're not touching their 401ks and things like that and retirement accounts. Do that, and then when you sell your house and you walk away with say $400,000 or whatever it may be, you give me a call. We'll apply it towards your mortgage. We'll lower your loan amount.
Right, because you re-amortize it over the whole loan.
Yeah, so at the end of the
amount.
day, you go from a payment of $3,800 a month
Right.
down to $1,200 a month.
Right.
And now it's back to manageable for you because you weren't planning on carrying
Right.
such a large mortgage, right?
And you don't have to go through the refinance.
Yep, and
so
yeah,
you just
so-
do this recast.
Exactly, fairly
Yeah.
inexpensive. You're not, there isn't new closing costs,
Right.
things like that. You don't have to set up time with the attorney.
Yep.
It's all done, pretty much electronically, and it's a great option for folks. I
Yeah.
mean, it seems like it's becoming more and more popular.
That's awesome.
Yeah.
So obviously there's options. So that's
Yeah.
why we need the experts.
Yeah.
And that's why we have Adam here.
Yeah, and it's a good way to get your house now and not have to wait till you list yours and get it
Right.
ready and do all the things and pack, and you've been there for 20 years, so you have a lot of stuff.
Right.
All those things.
Go through picture by picture before you move.
Yeah, so like I said, a lot of people have been taking advantage of it, and it's great. They really enjoy it. Yeah.
So one of the things we love to have our clients prepared. So when they come in to buy a house and they're really serious and they want to make a move, they really have to be ready to go. And talk to me a little bit about one of the things that for us makes a really strong offer is going ahead and getting the full pre-approval. Talk to us about pre-qual versus pre-approvals.
Yeah, so sometimes they get a little confused what the difference is.
Right.
Okay, and some companies call them the same thing.
Yep.
But in my world, pre-qualification is you talk to a loan officer, you tell them what you think your credit score is, how much you make, and how much you have in the bank. And depending on who you're talking to, they'll actually write you a letter saying you're pre-qualified for this.
We take you at your word.
Yes, and there's places that do that. Okay, and you can go online and do that. There's some problems with that. So obviously, there's the one big problem that might not be the accurate information
Right.
that they're giving you the qualification on. But the other part is, even if you have that letter, it's also important to know what is this actually going to cost you as a buyer. What are
Right.
my payments going to be? What should I expect in
Right.
regards to my down payment, closing costs? What does that consist of? So those things typically you're not going to get from that pre-qual because they're only doing so much work up front.
Right.
So in my world, I do pre-approvals. At that point, I'm verifying income, assets, credit. We're having a conversation about what your plans are, what the property is going to be used for. From there, we can look at different types of loan types. So, and you'll know what your payments are going to be, what to
Right.
expect. So by the time you go to put an offer in, you know exactly what to expect on the lending side, and you've done most of the legwork, right? On my side for the documentation,
Right.
because I know there's stuff on your end that you and your team have to deal with when you're trying to submit an offer. You know?
Right, and having a strong offer is really important. Even in a slower market, even if you think you might be the only one submitting an offer, oftentimes I always joke that when you're interested in a house, even if it's been on the market for 4 months, somebody else is suddenly going to swoop in and be interested in that house.
Happens all the time.
All the time. It's so bizarre. So being prepared, but also, like you said, understanding what you're comfortable paying, because they could tell me I could afford an $8,000 mortgage. Well, I don't want to pay an $8,000 mortgage. I would like to go out to dinner sometimes. I'd like to travel a little bit. So understanding the real numbers behind the total cost of ownership, because you'll even put in, when we start getting closer to the house, like total cost of ownership around here is really important. What are the condo fees or the HOA fees? Our taxes are pretty low, so we don't have to worry too often about taxes, but we still a consideration. And insurance costs if you're near the beach. Do you have flood insurance? So there's all these things that you have to be ready to kind of answer. We don't want any surprises. So when we're looking at homes, a lot of people will be like, I don't want to be in a flood zone. Okay, well, let's look at houses that aren't in a flood zone, because we do have plenty in a flood zone. But I can tell you right now, you can't be on the water here very often unless it's a retention pond and not have flood insurance. So we get that question a lot. They're like, I want to be on the water on a canal and have a boat, but I'd prefer not to have flood insurance. I can tell you that's almost an impossibility. So, maybe in Maine. I think maybe in Maine we could do that. But so there's a lot of documentation that comes along. The other thing that, being prepared with your documents, if you have a trust, for example, having trust documents ready to go. If you have a power of attorney, making sure that that's legal in Delaware. So there's all sorts of legal paperwork that you'll have to have ready for the attorneys, because we are an attorney state in Delaware. Even the title companies in Maryland that close houses, they're going to require this type of documentation. So before you start looking at a house, you have to have these things ready and know where they are. I have people looking at times through filing cabinets and things like that. Like, I know I have an old trust document somewhere. We have to know the name of the trust. We have to know who the signers are. So there is certainly a lot of preparation that goes into buying a home.
Yeah, and when I'm talking to clients, and they might ask me, well, why do I have to do this? I really just want to see the house, and that I totally understand that. That's the fun part of it. But what I also understand, and the analogy I use with them is, let's get this out of the way, so that when you do go look at the house and you say, hey, I want to put an offer in, Christine, and you say, well, actually, I just found out there's 2 other offers. We have to have it in an hour. They're not scrambling to find this paperwork. Like, they should be using that time to decide if they want to put an offer in, what they're comfortable with, as that part of it, not doing.
There should be fewer unknowns.
Exactly. And I always tell them, the analogy, I have small kids, and it's, hey, we're leaving to go to Florida in the morning, right? We should probably pack the night before, right? And have everything in the car, because that's where you find, oh, we're missing this, right? We're missing that. We didn't get that, and you have time to do it, as opposed to getting up at 5 o'clock in the morning, getting the kids in the car, and then you're trying to pack, and it just becomes just a miserable experience, because you start your day out trying to do these things. So it's and it hits home a lot with people, because everybody's probably done something like that.
Everybody forgot their toothbrush this time.
Yeah, exactly. So you get somewhere and the kid doesn't have their shoes, So so that's kind of why I bring it up that way, and then most people go, oh yeah, I've gone through that. Here, let me start getting you my things, so when I see that property, I can focus 100% of my energy.
And it's a lot. So we often close homes in 30 days. And as a client, I've bought homes too. It's a fast and furious process. Like, you have to be on your computer, because you're dealing not only with your agent and possibly a coordinator from the team. You're dealing with Adam. You're dealing with his processor. You're dealing with an attorney. You're dealing with a paralegal. You're dealing with a title company. So the emails and the responsiveness. I mean, people have to be prepared to spend some time answering lots of questions.
Let alone
we try to make it easy.
I mean, and you can make it as easy or as fun as possible. Like I said, being prepared is great. And like I said, a lot of our clients, they have financial planners and they have things like that, and they have their accountants, and
everybody's involved.
They have to get in touch with these folks as well. So there's a lot of people.
A lot of moving parts.
Yeah, I mean, it's a big transaction, so totally understandable. So it's just trying to be the best prepared you can be.
So being organized and prepared is the way to go when you're looking for a home.